Hello everyone, looking at the market rundown heading into Wednesday, January 4th. So the S&P 500 bulls showed up today. Originally it was with the help of oil pre-market, but the bulls certainly held their own and saw some strength towards the end of the day and kept that middle Bollinger Band, or I should say regained that middle Bollinger Band as support of 2252.70. So we knew consolidation at this point was normal and healthy. It was just a bearish note to end 2016 on, with some increasing bearish volume and a loss of that middle Bollinger Band for the first time since the election. But now we've quickly regained it, so we have to keep in mind the overall trend absolutely still favors the bulls, and every time we consolidate, we really need to see proof that the bears are taking over with spikes in volumes and breaks of key support. So we do have a nice new key support to be watching. The low of this consolidation is 2233.62, and we can see the weekly time frame after a little bit of sideways trading and a bear break last week. It is currently an inside candlestick, but certainly a bullish start to the week. The question will be, can the bulls continue to recover and head back towards the all-time high, keeping in mind we are not far off from that all-time high at all at this point. IWM never broke the low of December 14th, so that support is still intact, 134.26. We got down to 134.40. Bulls buying the dip today, and we didn't regain that middle Bollinger Band, 135.72. We lost it on Friday, and technically this is a back test and a rejection from that level. So for all of these markets, the middle Bollinger Band on the daily is going to be very important pretty much all week. So first thing each morning, update that level and get familiar with knowing where the price needs to close to either maintain or lose that support. So resistance here on IWM is 136.83 and 137.30, a very clear lower high pattern, but a base of support, so almost a bit of a descending triangle pattern, as we could put a horizontal line of support here, and we see that clear lower high pattern as the price continues to tighten. Weekly time frame here, still very much in a bull flag pattern, slight downtrend, but more so sideways trading, which certainly fits the description of a bull flag. And watching, we currently are within the inside candlestick range on the weekly here as well, trading within the range of last week, and watching the daily middle Bollinger Band going forward. QQQ and the technology heavily weighted sector here, we had the bull show up and regain that middle Bollinger Band, and an indecision candlestick with the upper wick and the lower wick roughly the same size, but bulls clearly coming out on top because we had an all-out dump day to end 2016 last Friday, and a nice bull recovery. We do have resistance, 119.95 and 119.99, the high of the past two trading days, but we have very clear higher lows here on the daily time frame. And again, the bulls are remaining in control. The all-time high is right up here at 121.52. We only got about $1.50 shy from that level today. Weekly time frame, still very clearly the bulls in control. We rejected from the upper Bollinger Band weekly resistance 3 weeks in a row, but we're still holding the middle Bollinger Band, still holding exponential support. On the verge of a bullish MACD cross. If we see a new all-time high, we will get a bullish MACD cross to go with it. So again, closing right near that middle Bollinger Band of 119.31. All three of these names, S&P 500, the Russell 2000, and the Qs, all about the middle Bollinger Band on the daily time frame and their ability to hold their low of that consolidation to end 2016. We break that low from last week, and very clearly the bears will be in control of the short term, and we'll be watching to see if the weekly charts can continue to maintain the higher lows. So that's where we stand heading into tomorrow. A bullish end. The last 20 minutes saw a surge in the S&P 500 at least for the bulls, and we'll see if that momentum can continue to the upside. With a lot of action in oil, there was definitely some correlations going on there today, so we'll be watching oil as well tomorrow. I appreciate you watching, and we'll see you soon.